This podcast is Growth by Design, conversations with entrepreneurs and leaders in the ecosystem who've engineered their leap into entrepreneurship and also scaled businesses and have been able to design leverage in their lives and re-engineer what success means to them. Today, I'm speaking with someone who sits at the intersection of fintech innovation, institutional wealth management, and entrepreneurship. Chris Nicola, CEO of Nicola Wealth, one of Canada's leading wealth management firms with over 16 billion in assets under management. Chris and I met many years ago when we worked together at Vision Critical, and then again at the BC Tech Hypergrowth Accelerator when him and his wife founded a Wealth Bar, one of Canada's first digital wealth management platforms. And that led through to an acquisition by CI Financial. And then he made the leap into institutional leadership, joining Nicola Wealth as CTO before rising to president and now CEO, succeeding the firm's founder, his father, John Nicola. He brings a rare combination of startup building mentality, technical prowess, oversight, institutional operating experience, and leadership to bring digital first thinking into a traditionally stoic environment in wealth management. Chris, your journey started in software and fintech, and now you're managing 500 people and 16 billion assets under management. For anyone who has not followed your path, give us the short version. Where did you start? How did you get here? How did the pedigree of Nicola seep into your veins, and what led you to the CEO role?
I'll try to give the short version, and if I'm going on, Diraj, just let me know. I will just quickly correct, not that I care about these things, but I know my marketing department will give me a hard time if I don't state that it's 17 billion now and growing. So it's a big firm, and it's almost 600 people. It was only recently 500, so it's a very dynamic environment that I'm coming into as CEO, still almost like a growth startup. My history with the firm actually goes back to when it was founded. So I was a teenager, but I was interested in computers. And so my dad was happy to have me help out. They had a very small company at the time. IT was a part-time job overall, and I would come in and be one of the part-time people helping set up servers, email, fixing networking issues and things like that. I actually remember taking a course at Langara College here on Novell NetWare, which was still the technology we were using at the time. Windows NT wasn't even a thing. I barely remember how any of that worked. So I started in technology pretty early, and then I worked in the summers at the company. It was a good way to make some money and build on those skills, but I didn't want to go into finance, and I didn't want to even necessarily go into IT or technology. I went into physics. I thought I was going to be a scientist. That seemed really cool. I got my inspiration from being a Trekkie, like probably most of the physics class at the time. And then I found that physics was both very hard and not particularly leading to any clear career path. And so after about 2 years of that, I enjoyed the challenge, I enjoyed the math, but I switched into what was called applied math, which involved a lot of computer science, electrical engineering. But I still thought I would go on a research direction. So I did a master's degree there, in part because I had terrible timing. I graduated after the dot-com bubble imploded. So all of the engineers up until that point were getting employed by Nortel Networks, if anybody can remember them. And then there was no Nortel Networks when I graduated.
And that was in 99, 2000?
My original graduation date was 2001. The change in programs and taking a year off also to work at Nicola Wealth on an internship running IT and putting in place a bunch of new innovative software that we developed internally. We built a paperless office system, one of the first. Taya, my wife and also my business partner, and I worked that summer, and we took an entire financial firm in, I want to say, 2001, paperless, all because John, my dad, wanted to free up space in the office, and he believed it was possible. So we figured we would find out if it was, and we found out after we did it and broke several Xerox machines doing it that almost nobody had done this, that basically Xerox had one or two big law firms that were trying to go this direction. So that was sort of the type of innovation we were already getting into, and they've been paperless ever since. So when I graduated, Nortel had been gone for a couple of years. The tech industry was still kind of recovering. The startup boom hadn't really taken off yet. And I was really enjoying what I was working on and studying. And one of my professors in fourth year said, do you want to work on this project? It was error correcting coding for wireless channels. It sounded really cool. I actually did enjoy it. And so I did that and figured, I'll get a PhD. And I just kept going. We moved back to Vancouver. I went to UBC. And about halfway through the PhD, I realized that I was bored out of my skull. I did not like being at university for this long, and I wanted a job. So again, and this is the problem with having a very successful father and family, I went and did some software development again for Nicola Wealth. I knew what they were doing, I knew their systems, and it was a good way to get my feet wet with building my own user-facing applications.
Mm.
And so I did this as a contractor, and I guess you could kind of say this was sort of like my first startup. I just had one customer. I built two totally unique pieces of software, and if at the time I'd had sort of the foresight to think about that the way I think about software now, I might have actually packaged these up and sold them. I was in
Hmm.
hindsight, that was probably a mistake. I could have had my first business then. I built an application for insurance that I think is still unique in the market in Canada, and they still use here today, and another application for handling their commission accounting, allowing them to share revenue across advisors. And then I wanted to get into the startup world. I knew there was a number of interesting companies. I applied to companies in both the US and Canada. I ended up working with you at Vision Critical
Hmm.
for not a huge length of time. That was a very dynamic time for Vision Critical. And then I got
Yeah.
poached by another startup. So most of my career has been startups. There was a third startup after that that was a 0 to 1 kind of startup. They wanted to build a social network. Not the, in my opinion, not the best business to get into at the time. And by that point, Taya and I were already working on the idea for Wealth Bar and getting ready to
Yes.
launch that.
And you launched Wealth Bar right around the time Wealth Simple launched as well,
Yeah,
right?
so that's an interesting story. I mean, that's that was sort of the kind of rivalry at the time. So I actually had a meeting with Sam Seif, and he was being very coy about it. But I think he had reached out to John. We had booked a lunch. The dates were wrong. I was working in this tiny gas town office, and I was there with a software development conference hoodie and which I think had food stains on it. And Taya calls me and says, Sam is waiting at the hotel for us. Apparently, we've got the dates mixed up. You've got to run up there and go meet him. And I'm looking at myself thinking, great. I've never met him before. So he's, if you've ever met Sam, he's a well-dressed man. Here
Yes.
I come waltzing in. So we had a good conversation. He didn't mind. He'd been working with startups in Toronto for a while, so he was used
Yeah.
to it. He said he couldn't invest in what we were doing because, he was doing something similar and he couldn't speak much about it. But we had a good conversation, and then we eventually found out about Well Simple. I will make the claim here on your show that we were the first.
You were the first, actually. Yeah, I
Depending on
remember that.
it depends on what you want to count as the first. So I'm going to count it this way. We were the first to submit an application for the robo-advisor concept to the Securities Commission. In fact, by the time we
Yes.
met Sam, we were already speaking to the Securities Commission because
Hmm.
somebody had reported our pre-launch website. This is the kind of industry we're in,
Yeah.
as being offside, which the Securities Commission didn't agree with, but they did want to hear what we were doing. So we
Yeah.
were working with them to explain how a robo-advisor might work. BC has a bit of a stricter regime, so we had to submit the entire business plan and the policies and procedures and how it would run. And we also had to demo how the KYC, the know your client piece would work. How would we do what portfolio managers up until then were doing in an in-person meeting with a client? How are we going to do that virtually? We had to explain that. And this evolved into what the BCSC termed the call as needed model. So this was a model where the client has access to the portfolio manager, but all of the information the portfolio manager normally communicates would be in the onboarding, would be through the web application or the mobile application. And
Hmm.
unless the client has any further questions, they can just answer the questions and go back and forth.
I remember meeting Michael Kachin
Yeah.
2015. He came to Vancouver.
Was that the Whistler conference there?
I think he might have been going there, but I met
Yeah.
him at Rogue, and I'm like, look, I'm really interested in try this. I need to figure this out. I hate going to the bank. I hate talking to people. How can I be one of your first users? So I was a beta user,
Yeah.
and then I went through the sign up process. You still had to download the PDFs because wet ink was still required. Remember?
Both of us had the same first version because we worked
Yeah,
with the
yeah,
same back office custodian. It
yeah.
was very hard to launch a robo-advisor in Canada. It was nothing
Yes,
like the US, where the US had they had custodians with APIs.
yeah.
Canada did not, right? There was no way to do it.
For the viewers' benefit, what is a custodian?
So the custodians are generally the brokers, right? So there's different
Hmm.
types of brokers, but these are the brokers that effectively hold the accounts. Most of them are run by banks here, but there are a few exceptions.
Hmm.
Questrade is a broker, for example, and they run the book of record and an accounts software. There's
Mhm.
really one company. It's run by Broadridge, and one piece of software that dominates most of Canada called Datafile. It was built in the late 70s.
And it's still antiquated. There's still faxing required. There's still paper documents, right?
No, we've modernized the front end. So the big problem was none of the banks built
Yeah.
any middleware software. So you couldn't open an account without
Yeah.
paper. And when we first tried to launch, National Bank was the custodian that Nicola Wealth was using. So at the time, we asked National Bank, "How can we submit digital documents to you?" And they said you couldn't. In fact, the argument we were often getting from compliance people was like, it's not legal to do this digitally. Digital signatures aren't legal. All sorts of totally specious arguments. So
Yeah.
we had to convince others, and it wasn't, it was an American company. I mean, it goes to show you the issue with innovation, but particularly in the finance industry in Canada. It was an American company, Interactive Brokers. It was the first call that I made. I was talking to their head of compliance because I was testing out all of the different systems, and I had to dig everywhere. And I found Interactive Brokers. I could open the account fully online. They didn't even use DocuSign. They just showed me the documents, and I typed my name in at the bottom. It was kind of strange and clunky and not very
Yeah.
fancy. And I called him. I said, "How are you able to do this?" He says, "Oh, this is all totally legal. Like we've confirmed it." He used to work for the regulators, and I think that was one of the advantages he had, is that a lot of compliance people here want to believe things about the regulators, but they've never gone to talk to them. And that's how we were able to pioneer the robo-advisor concept. We just sat down in a room with the BCSC and we talked to them. They're very interested in innovation, but you have to have a conversation. And so, he said, "No, you can do all of these things." And he was explaining all of these things that we were being told weren't true. And so that sort of helped me open my eyes, is you have to define, if you're going to be an entrepreneur in this space, you have to define what innovation is like, and what is best for the customer. And you have to go to the regulators to explain to them and make your case. You can't accept the status quo.
And I think that's the natural situation in terms of Canadian banking and disruption, right? We are antiquated. There are organizations like Wealthsimple, like Nicola Wealth, that are pushing and pulling, kicking and screaming the banking industry into the new world. What's been the experience lately in the work that you're doing? I know we've spoken a bunch over the years. I've ventured into the wealth management space with the work that I did with MyFo
Yeah.
and getting access, providing agency to high net worth individuals. Now I'm working on another project called Shatterpoint, which is
Mhm.
for the back office, for a multifamily office.
Yeah.
So I have some intimacy here, but for the rest of us that struggle with banking in Canada, where we have to still go to a banking location, what is the situation today?
It's getting better. We're still behind. Globally, we're
Hmm.
behind. And I think Canada as a country, and certainly our elected officials, really need to think about that and whether that's acceptable. But we are making progress. I think the open banking initiative has actually gone further than I thought it would have. I was part of the early open banking discussions as they went across Canada. And I left those meetings feeling a bit deflated, like, we were just going to talk about this for a long time and not make progress. And today,
Hmm.
we're launching the new payment rails. This is such a critical thing. Just for customers, they don't realize how important this is. A whole ton of fraud actually fills the space of our slow payment rails because the feedback loop is slow. So it takes days to figure out
To
and to deal
reconcile that
with,
there's,
and that
yeah,
there might be fraud.
yeah.
Instant reconciliation will have a huge impact on reducing fraud. And with the increased risk of fraud because of AI and everything, it's critical that we are innovating and we're moving the technology forward, because these technologies are antiquated and they have risk, but also access to data. So, the biggest challenge you have with innovating in the space, with being a smaller player, is access to data. Data is a bit of a moat the bigger players have in keeping their clients, and making it hard
Hmm.
for them to move. And so that, I think, that takes competition out of the system. So that's moving forward, and I think that's hopeful. We've been pushing to try to, Nicola Wealth in particular, not just Wealth Bar, but we want to be able to do consolidated reporting across all of our clients' accounts. Our clients come to us to be sort of their quarterback across all of their financial issues, but we don't always manage all of their wealth, and we don't
Hmm.
always manage all of their financial concerns, but they want us to be able to report on it and to educate them and to advise them on all of those issues as best we can. And so open banking is a big deal for financial advisors across the country who want to be able to see that picture.
I would imagine being able to do that across the board actually opens up the opportunity to offer that service to your clients, and then be the lead in to take over those assets. Just being able to say, look, we can see it across the board. and you need some rebalancing and you need to revisit your strategy here between institutional assets to alternative assets and so on. You've got the technical background, you've got the startup background, and now you're the CEO of one of the largest wealth management firms. You've got this stack of internal infrastructure, which I suspect has some antiquated elements as well to connect to the banking system. How are you bringing that thinking in terms of disruption, even inside Nicola, and elevating your team? I know just from a perspective of high net worth, whether you're talking to someone who's got 100 million in assets or 10 million in assets, what they really want is kind of that mint experience, agency in themselves.
Yeah.
They can look and see and understand where their cash is, where's their liquidity, how is everything looking by asset, and then also being able to distribute to their various family members. The other aspect is the hit by the bus scenario. Most of the high net worth individuals I talk to, they don't have a plan on what their spouse is going to
Yeah.
do or know about if they pass away because of the fluidity of their assets and the custodians and who have access. Yes, you could have a wealth manager, but there's also still movement in other spaces. How are you navigating that aspect of that client experience as well as the advisor experience?
The interesting one has been I often talk to people who are in the tech space. They're often former entrepreneurs or serial entrepreneurs. Many of them become angel investors later on in their lives and careers. And some of the ones that I know are a bit older, and they talk to me given my current role, and they say, I've always managed everything myself. This is kind of a typical thing for some of these very successful entrepreneurs. But as I get older, I think about my family, and they don't seem as interested in what I do in making these investment choices and investing in startups directly. And I feel like I need to find a firm that can do some of the things that I believe in, which, would include things like private equity and that sort of thing, which is something that we do, but also that they need planning. They need talking about basic financial education for the long term, being able to understand the complexities and nuances of tax implication and generational wealth transition. So that's definitely something we think about. We're seeing happening in this massive generational wealth transition that's occurring. I mean, there's a number of articles out about it now, but globally, it's something like $85 trillion that move from this large baby boomer generation. Canada has a large baby boomer generation. I don't have the numbers for Canada, but it's very significant.
It's massive, actually. It's a key area that we're focused on.
Yeah.
And just to give you a little bit of context, one of the things that we do, because we take these principles of scale that would traditionally be, and also how it evolved over time for startups when they're scaling from 0 to 10, 50, but bringing those practices back in-house to small, medium enterprises to re-engineer their companies in terms of how they can scale going forward. So most companies are grown organically, and that's really effective, especially when you're talking to a 55 to 65-year-old founder. They've been running their SaaS business. It's $10, $20 million. They're looking at an exit. And when they do the math post-close in terms of what their proceeds actually is, that ends up starting to become a small number, especially if they've got a heavy cap table. You apply some of these practices, they go from 6% year-over growth to 30, 40% year-over-year growth with a higher EBITDA, lower headcount costs. And the exit starts to look that much better. Sometimes 2-3x in terms of absolute value in their pocket. So that whole transition provides so much opportunity, and not just for the wealth transfer, but anyone facilitating it as well. To continue down your path, like what are you seeing in terms of that transition from the wealth management side?
We're seeing more and more conversations happening around it. One of the big concerns, I've had conversations with people, for example, just sort of finding out later in their lives how complex estate planning is. So we've got more people, sort of younger baby boomers, also dealing with wealth transitions of their own if they've had long-lived parents, and saying, wow, the estate planning piece is way more complicated than I originally thought. I have to give more thought to this. So I think what we're seeing is a lot of people have underestimated potentially the level of complexity there is. There's a lot of risk too in wealth transitions. So the other thing you see a lot of, which is very unfortunate, is how, especially when it's almost worse when there's more money, but it can create a lot of family strife and challenges if not done well. So I've seen situations where the family's trying to keep things simple. So one of the siblings is the executor of the estate. And there's nothing glamorous or special about being the executor of the estate. You don't have any big benefit or advantage to doing it, but there's a perception of a lack of independence, or that there could be, something that's unfair. And there's always going to be conflict in many of these situations. And so making one of the family members the center of attention for that is often a mistake people make. They think, well, we don't want to pay somebody else a whole bunch of money to be the executor, but sometimes that's critical to do for family cohesiveness, is to understand that somebody is independent on this, that these decisions are being made fairly is critical. So there's all these little nuances that people don't like to talk about death, right? It's
Hmm.
we talked about this, even we had blog posts about this even with Wealth Bar, is, one of the reasons to work with a robo-advisor or any advisor that does planning is if there's anything that's going to be transitioned in the estate, you really want to make that plan, put that plan in ahead of time in advance, make sure that that's not going to create problems later, that you're not leaving it to the last minute. These are the things you want to be planning early and reviewing reasonably often. It doesn't have to be every year for something like that, but that you've really given a lot of thought to it and you're not leaving this to chance.
How are you seeing technology play into the space, especially with what you're doing now? Where are
I,
you seeing the opportunities with the work you're doing? And the 500-600 people that you have, I would imagine most of them are advisors, but
Mhm.
there's probably a large population of people within the organization that are just supporting those advisors as well. Where do you see that transition happening for wealth management for Nicola, but also in Canada as a whole?
So I'll sound like every CEO and executive out there when I say, AI really is a game changer. And I'll caveat that by saying I'm not a big AI hype guy. I'm really talking about what we can already see AI is capable of today. So I'm going to give you the most incredibly mundane and simple example.
Yes, yes,
But
yes.
if you're a good advisor, if you are really servicing your clients, providing planning, providing actual planning, you're probably talking to your clients as much as 4 times a year, and you're probably meeting with them in person at least 1 to 2 times a year to really dig into planning. And so you're having a detailed meeting. You're spending a lot of your time in meetings with clients, and out of that meeting come decisions, action items, information that should be communicated to the client. And so in an ideal world, you're taking detailed notes. You're summarizing those notes. After every meeting, you're sending an email to the client. You're also doing all the prep leading up to that meeting to say, okay, I've got to review my notes from last time. I've got to think about all of the things that are relevant to the client from this past quarter, both with respect to their investments and their financial plan. What did we do last quarter? And then I've got to bring that to the meeting, make sure I cover all of those agenda items, and then go on. And we're seeing simply using AI. I mean, it's the most trivial thing. Salespeople have been using this for years already to do your notes, to organize those notes,
Yeah.
being able to ask the AI to then organize and create the email for the client, being able to ask AI now to prep for your meeting, just the basics. And we've only really scratched the surface, but just the basic pilots we've been doing with advisors on this is a 20% savings alone. That's just the tip of the iceberg just for meetings, because it's such an incredible amount of time. It is the bulk of the work of a good advisor, is those conversations with clients and then the follow-ups and actions. So that's going to impact the advisor, but also the experience the client is getting, where you're getting much more consistent, well-organized follow-ups and follow-throughs on the notes. Those action items are being directly piped into your CRM and being followed
Hmm.
up and tracked. As they're completed, updates get out to the client. So this is improving the experience, but it's an incredible time saver for advisors that are doing the work. And that's really just the beginning. I wrote in the business plan for this year, I made AI kind of one of 3 pillars of focus for the organization. And again, I sort of joked about that being not the most original thing any CEO could write in their 2026 business plan. But I think it's unavoidable. I think we have to accept the critical nature of moving very fast here to leverage the incredible productivity unlock that's available here. I mean, we can point AI to this within internal systems, properly secured and with proper access permissions for an advisor to be able to collate all of the documents and history on a client and be able to build them a dynamic dashboard that they can ask questions of dynamically for any
Okay.
client. So
And
you
that's,
take
I would assume, built internally.
here's the thing, right? And so this comes down to this question of is AI eating software, which I wrote
Yes.
about on LinkedIn recently. And the answer is at this point, I don't know. I think it's very
Yeah.
early days. I'm seeing products being built like this already. Shatterpoint, for example,
Yes.
is a product in that space. So I'm seeing products, they're being demoed. I'm talking to, we're not the only firm. I'm
Yeah.
talking to other PMs and other shops. They're already demoing and testing these products. I really don't it's not a big deal to me whether we build or buy it. At the same time, I spent the weekend coding a pretty robust app that is querying the stock market data globally, right?
Hmm.
We have
Hmm.
a long short contest internally. And of course, people have to pick stocks from all over the world. They can't just limit themselves to Canada and the US. So every stock market is being pulled. And that took a weekend. There's nuances and challenges and difficulties there. There's even caching in the system that probably would have taken me full time a week minimum. And I'm a pretty at least used to be a pretty good software developer, maybe not so much anymore. So I think it's a good question. I think there'll be a bit of both. I think it will be a combination of both. I am interested and I'm excited to see how it shakes out. But if we can find the right product to buy, we will absolutely buy. And my general view is, look, the best software will continue to be made by the best software companies that
I
have the best
agree. I
product
agree.
vision. I think some companies will have certain unique visions, certain secret sauce they're doing that they can build interesting tools. I wonder a bit if the piece of software that might get eaten by AI unless it really evolves might be Excel. Because
Hmm.
I'm seeing people in our teams, we've got analysts and researchers on the equity markets, fixed income markets, and everything, and they use Excel. Obviously, it's a big part of their job. But I see them
Hmm.
now using AI to write tools in Python, right?
Hmm.
And it's got great analytics libraries. It's way more powerful than Excel for some of the stuff they're doing. And it's not, many of them actually know how to do this. They do understand what they're doing, but was often faster. It was quicker, dirtier, cheaper.
Hmm.
With AI, will Excel still be the quick, cheap and dirty solution that you want to use to do really good, analysis on
Analytics
data?
and
Maybe
yeah.
not. Yeah.
Yeah. The in on the Excel front, with Claude, you've got the Excel connector.
Yeah. Yeah.
Yeah,
And
I
I
think
use that.
OpenAI is
Yeah.
also releasing that.
Yeah.
I've been using Shortcut, which has its own libraries. Building out full-time models that are dynamic in
Mhm.
5-6 minutes.
Oh, it's
Being
unbelievable.
able to analyze deep data, especially on data room and due diligence, it's been phenomenal. It's the
Yeah.
kind of things that
Yeah.
took a lot of time before. How are you dealing with the separation of data? When I would imagine that if you use an off-the-shelf piece of software that's built for your space, they would
Yeah.
have private data sets for
Yeah.
your organization and then virtual private containers for each client and those kind of things. But
Yeah.
Claude or OpenAI is not offering that.
Yeah.
I mean, you could have it for your user, but not for your user's clients. How are you tackling those kind of problems?
We're primarily using Copilot for that reason. So we're sort of
Ah,
integrating
okay.
through Microsoft. All of the security and everything is set up there in our private cloud. We've got the data protection set up through Microsoft's OneDrive and SharePoint systems. So, that seems like a reasonable path. I mean, not to pick winners yet. I do find that Copilot in terms of total experience is sometimes a little behind,
It's very behind.
but
Yeah,
I was trying to be nice.
I know. I know. It's like terribly behind. Yeah.
Yes. I think, well, recently I noticed I was sitting around with it because I'm personally using Claude for a lot of stuff, but it's mostly marketing based stuff. I don't do
Yeah. Yeah.
a lot of client work
Yeah.
directly, and I've been using it to do these coding projects. So, I'm not giving it access to sensitive data. We were working on something. I was working with a teammate, and we just decided to pick up Copilot and see if it could do something that I've been using Claude for, which was simple, as you said, like an Excel connector. Like, would it generate a Word document if I asked it to within Word? And I remember only a few months ago asking it to do this and being shocked that it couldn't. It's Microsoft's own product. It can't generate a Word document, and sure enough, it did it this time. It's
Hmm.
got the tools and the libraries in the background now, so they seem to be starting to catch up. But it's just not as good. You're right. It's not as good of an experience. You don't have the same sort of like build your project, put all your documents for that particular project in their experience that you're getting from Claude or Notebook LLM, for example, is
Yeah.
another one
Yeah.
that I've
Yeah.
really enjoyed. Just the free version of it is unbelievably powerful what they're giving away.
Well, thank you so much for sharing your world, Chris. It's a
No,
space
thanks for having
that
me.
I only recently started to get into in the last 4 or 5 years. It's opened up my worldview about wealth management in Canada and also
Yeah.
the landscape and how technology is changing it. And I think you're sitting right there. There's very few people, in fact, you might be only one of a handful of people in Canada who sits on both sides of the wealth management space with such a deep technical background and being in such a formidable leadership position, especially with the number of clients and the assets that you have. And I'm looking forward to see how Nicola shapes the new world paradigm. And I'm glad that you're at the helm.
Well, thank you. That's very, very kind words, Diraj. Thank you very much.